Let's start with a really simple but powerful idea. To understand a huge mistake that so many people make in the financial markets, we actually need to talk about cricket for a second. Yeah, cricket. Specifically, what happens when you're completely outmatched and you don't even know it.
Just picture it. You're standing there, and Jasprit Bumrah is about to bowl a 150-kilometer-per-hour scorcher. And what's in your hands? A plastic toy bat. It's not just a mismatch, right? It's a complete disaster waiting to happen. Well, what if I told you that this exact same scenario plays out every single day? Not on a cricket pitch, but in the stock market. And there it is. The cricket pitch is the derivatives market, and that plastic bat, well, that's the set of tools most retail traders are bringing to the fight. Every single day, thousands of people are stepping up to the plate, totally unprepared for the professional-level game they've just walked into. So let's call this exactly what it is: the plastic bat problem. It's this whole issue of being fundamentally under-equipped, totally outmatched. Basically, you're set up to lose the game before you've even made your first move. Because here's who's on the other side of the field. You're not just up against other individual traders. You're facing massive institutions, the real pros. These guys have the best tech, mountains of data, and entire teams of experts who live and breathe this stuff. They've absolutely mastered the game. It's David versus Goliath, but David showed up without his slingshot. So what's the real-world result of this epic mismatch? Well, the numbers are pretty staggering, and they point to a huge misunderstanding about why so many people fail at this. 94%. According to the source material, that's the percentage of retail traders who lose money. Just let that sink in. For every 10 people who give it a shot, more than 9 of them fail. But the most important question isn't that they fail, it's why they fail. And here is the absolute key insight. This failure has nothing to do with how smart you are. You could be a genius and still lose your shirt in the market. The problem isn't intelligence, it's a lack of training. It's about being trained to see the real game that's being played, not just the simple version you see on your screen. This really shows the two different mindsets perfectly. The plastic bat approach, over on the left, is all reactive. You're just chasing prices after they've already moved. But the professional approach, on the right, that's proactive. It's about looking at the market structure to figure out why a price is likely to move, before it ever does. Okay, so how do you actually make that jump from being reactive to proactive? Well, it all starts with learning to look past the price chart itself and starting to see the invisible forces that are actually pushing the market around. This is the core idea. Just watching price candles go up and down is like watching the scoreboard of a game without ever seeing the players on the field. Sure, you see the result, but you have no idea why it happened or what's likely to happen next. So the first pro tool is something called Orderflow. Think of it like a thermal vision camera for the market. While the price chart just shows you where the ball landed, Orderflow shows you the intensity of every single move along the way. It literally reveals who's in control, the big institutions or the retail crowd, by showing you exactly where the big money is being thrown around. And the second tool is Market Profile. Now, if Orderflow is the thermal camera, Market Profile is the blueprint of the entire building. It takes all that trading data and organizes it over time to show you the market's structure, the zones where the market has accepted a price, and, just as importantly, the zones it has rejected. This is how you start to understand the game plan, not just the individual plays. And when you combine these tools, the source says that a really fundamental shift starts to happen. You stop being a follower, chasing every little price jump, and you start to become a leader. You're not guessing anymore. You're anticipating what the market might do based
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. Welcome to this Monday 5 p.m. session. We have a lot of things to cover. So let's start quickly. First, going through what we have done in the previous week. And for that, let's have a quick look at the weekly report and the weekly structure. What we did in Nifty Spot. So in Nifty Spot, what we did last week on Monday was we made new ETH at the open. This was a gap up, but right at the open, we got an open is equal to high start 26325, and we did not get any demand. And what we did was we got back into this weekly value, and that was telling us that the upside is capped and we are probing lower. So we went on to complete 80% rule in this weekly value. We continued downside, and you can see how we got initiative selling tails on the first 3 days of the week. So this was telling us that the sellers were in control. So this is a very important cue which we can make out from market profile about who is dominant, and if you have got a initiative player at the open. Because this is the spot chart, we can only look at the TPOs, whereas in futures we have the order flow also to help us out. So what we then went on to do is, when we form these lows for the week, this came in form of a failed range extension. You can see how on Monday and Tuesday we were able to extend lower, but third day, that was on Wednesday, when the seller made an attempt to make a lower low, extend the initial balance, that showed us failure. And this failure of the sellers came at a very important reference. We talk about how we carry forward the 3 monthly references for the entire series. So when we completed the month of November, we had 3 levels which we had marked out. 26060, which was the rollover point, 25969, which was the November month's POC, point of control, and then 25915, which was the November series VWAP. So when we see at a monthly reference, you can see how the POC shifted right at that series VWAP, near the series VWAP, and how the seller were failing to extend here. So this was telling us that the monthly levels are giving support. And what did we do on Thursday? We got an initiative buying tail, and this initiative buying tail came above this prominent POC. So whenever we form a P shape or a B shape profile, the POC becomes the important reference for the next session. That will tell us whether we are getting any follow up to the previous B or P. If we needed to get some follow up to this B shape profile, we needed initiative selling below this POC. But what we got was a buying tail, and that is the reason we got a retracement on Thursday and Friday. Thursday, the up move stalled with a typical seaside extension, which continued on Friday with another initiative buying tail. So we went on to tag this VPOC of 25174, and we made a high of 26202. So on the weekly time frame, it was still a normal variation profile to the downside. You can see how we had this initiative selling tail. So we had to take this selling tail out for more upside. 26297, I think, was the base of the selling tail, and 26325 was the high. And value was overlapping to lower, and you can see how this is a nice balanced value area zone which we have made. So that is the reason what we were looking at for today. On the upside, we were looking at this 26191, the POC from Friday. We needed auction to stay above this for more upside, but this did not happen. In fact, the highs of today was well below this. 26178, I think, was the high in spot, and from there we went on to break these downside hypos, and we hit all of them. So very clearly, today was a day where we were looking at a one time frame on the downside, and it happened in form of a trend day down. In fact, we broke below this. We almost matched that low of last week. 25891, 25892, I think, was low of today. So we almost tagged that, but we went on to close around this 25960. You can see why 25960 is again and again holding. This is the November month's POC. So we need to be aware about it. And again, for tomorrow, that 25960 will be an important reference, because that has been the close of today, and 25920 is the POC of today. I'll just quickly open up the chart in a bit before I just finish up Bank Nifty's weekly report. So what we have done in spot is we have completed the 80% rule on the weekly balance. I just spoke how we had formed this nice balanced profile. So we opened above this, we got rejected, and we completed the 80% rule in this weekly value. We have stopped right at this value area low. So this is how we need to be aware about where and how we can make use of this setup. It's a very important setup and it keeps playing out on all time frames and it is very effective. So quick look at the Bank Nifty spot. What we did last week in Bank Nifty spot was once again a normal variation profile to the downside, but the open in Bank Nifty was bullish. In Nifty, we saw a rejection above previous week's high and an entry immediately back into the value. But in Bank Nifty, in the initial balance, we remained above out of this range. And what happened was we made an attempt to make a extension higher. This failed. This was the minutest failed range extension or a failed auction, you can say, because it was by decimal point where the C tried to make a new highs but failed. What it was telling us that the buyer is failing, and because of this a failed auction got confirmed here at 6114 and we went on to complete the 280R objective. I think it was coming to 59221. So what, again, just like in Nifty, the first 3 days went lower, but it was not as simple as in Nifty. In Nifty we saw initiative selling tails on the next 2 days, but in Bank Nifty there was neutral profiles on almost all days of the week except for Friday. So what it was telling us, all days we had dual forces acting in the market and they were keen to gain control. Ultimately what happened, this poor lows which stalled the down move, you can see this has come at 58925. And as I was talking about Nifty monthly references, in Bank Nifty we had the monthly reference, the rollover point was at 59150, the POC was at 58937, and the series VWAP was at 58603. So you can see how in both Nifty as well as Bank Nifty we started the downside probe but took support at the monthly references. These monthly references are there in the monthly report. We have published it. It is there in the forum. And I'll just go to the daily report which we have. Even the daily report has the link to the weekly and the monthly report every day. So whenever you want, you can just open up and you can click the references. The links to the charts have also been provided in the post. So you yourself can open the market profile chart of that time frame also. So what we saw in Bank Nifty was it took support right at the POC of November and it was showing us similar lows, that is exhaustion. So some similar lows are not to be repaired. It is a signal that the seller is getting tired, and that is the reason from here we formed this probe higher, but again the C side halted this up move and we got a retracement lower. But on Friday, on the RBI policy day, we saw clean intent by the buyers who left this initiative buying tail and went on to make highs of 59,800. 59,800 is an important reference in the futures also, and it was the halfback. 59,821 was the halfback of this 1st of December profile, from where we started the down move after confirming this failed auction. So it was important for us to get about this 59821 for more upside, and we were looking at that as our first hypo on the upside. And if I take you to the hypos for today, before that, what kind of a profile we had on the weekly? It was a normal variation profile downside, but you can see how the value was overlapping. So we had a 2-week balance, you can say, because we had similar value for the 2 weeks, but the POC there was a shift. It was at the top in the previous week, it shifted to the bottom in the current week. So what were the hypos? As I was telling, the first hypo on the upside was this 59821, the halfback from December. So this was not taken out. We were well below this at the open today. And what we saw was, in fact, we were below this POC also of Friday. The high today we made was 59713, I think. So it was very clear that the PLR was to the downside, and we went on to break all these hypos and even break the last one. We made a low of 59030 in spot, I think, today. So same thing, what we have done the 80% rule in this value, and but this poor lows are still holding. So we will have to see how in the coming sessions we shape up. I'll just quickly open up the profile chart of today, and we'll see what I was explaining. So you can see this is the weekly chart, and how today we opened above this value, but we left an initiative selling tail, and what we did, we formed an one time frame probe lower, and we went on to complete the 80% rule. You can see how the lows are right at that value area low of last week. So we will have to now figure out, this is a trend day down which we have started the week with. So we have important references. This extension handle at 26,004 will be the immediate upside reference. 25960 is the level where we have closed, and this POC 25920 would be the support. So we will have to see how the settlement tomorrow shapes up. I'll come to the gamma tools in a bit of that. So let's now have a quick look at the Bank Nifty weekly chart. And you can see a similar kind of auction taking place in Bank Nifty also. We opened at the edge of value, but we were not able to take out that 59821. We were below Friday's POC of 59727, and once we got back into this weekly balance, we completed the 80% rule. We have tagged this POC in the value area low. So that is where we are. What we have done is we have just tested the value of last week today. So we will have to see, and this both are trended down, and we will have to see how we take this forward. The seller has been in control. This is the charts we are seeing are spot charts, so we don't have volumes in this. So how do we identify initiative activity? Is by this ATPO selling tail or a buying tail. If we always give lot of importance to the open and the initial balance. So if you are leaving a tail at the open in the initial balance, that serves to be an initiative one. So that is why I gave you the example of how last week we saw initiative sellers coming into Nifty for the first 3 days of the week. So that is about the spot. Let us now quickly move on to the futures chart. And before going on to the futures chart, I would want to give a small brief about the daily report which is done on futures. So this was the daily report based on Friday's close, and you can see how we had a normal variation profile to the upside, and we had the business areas marked. We were at a very important stage in Nifty futures. 26335 was the monthly POC of December, the current month's POC, and 26325 was the first business area on the downside for today. And you can see today when we opened, we got an open high right at this same level, gave us a open high start last week in spot, and today we saw the same thing happening in futures. So when we got this and we were not able to take this business area on the upside out, we knew that the PLR is to the downside, and we have gone on to tag all these business areas. In fact, we have made new lows for the series of 26030. So you can see, I'll come to the profile and the order flow chart in a bit, and we'll see how that confirmation came and how our main jewel, the wallet which we call the NTM VolumeX chart, also gave us that confirmation right at the open, and how that new feature which has been added of the ratio between the put and the call will help you even much in a better way to manage that tool and make use of it. So this was the Nifty futures, even in the Bank Nifty futures. we had a normal variation profile to the upside, and similar thing as we saw the bullish hypo was not tagged in Nifty futures. You can see where the high first bullish area of today in Bank Nifty was 60,081 was the first bullish area, and the high which we made at open today was 60,080. Yes, the trading terminal high was 6110, but in the order flow we did not see any volumes above 60,080. And what we then saw was a move below this POC, and we went on to tag all these business areas. So this is the place where you can find the weekly and the daily reports. You have this in all our daily reports. The last line at the bottom, you have the monthly chart references given over here and the weekly link given over here. So this will take you to the latest weekly report, and this will take you to the last monthly report. So this is where you can open up any of the weekly or the monthly ones. It is very important we do the top to bottom approach, and it is for a reason. So it's very important you are aware about what the auction is doing on the higher time frame, on the medium time frame, and then on the shorter time frame, irrespective of what time frame trader you are. So let's now move on to the actionable part of today and look at the Nifty futures profile along with the order flow. So before we start with what we did at the open today, let us just have a small discussion of what we saw at the close on Friday. We saw this IB30, but it required activation. So at open today, we were looking for a bullish move provided we get volumes above this IB30 high. And if we would have done that, our stop loss would have been this 26280, and we would have looked for the target on the upside, which would be I think 26425 and 26500. But what happened? And the POC of our first reference on the upside was this 26335. So what we saw was we opened below this. It was an open high start, and we went on to break this IB30. This got cancelled, and not only it got cancelled, it gave us a very important cue. You have the ATPO VWAP right at this POC, and you can see how the BTPO left a selling tail right at this reference. So what was this telling us? The buyer reference which was left on Friday is now being taken over by the seller. And you can see from there, it was one-way traffic all time. And we went on to just keep going lower. And when it broke, we not only repaired this poor lows from Friday, but we left an extension handle over there to go and make new lows for the series. So it was very clear at the open that we are below this POC. You can see how we were below this POC and how we got this initiative selling tail, and how in the order flow we saw the 26280 getting negated, and we left a initiative selling tail. In fact, I'll take you to the 3-minute order flow also in a bit, where we got an IS3 signal right at 9:30, and that told us that because the open was below the POC, we were already having a downside bias. And once we got that IS3 which got activated, we knew that we just need to ride the signal out. And it was a very powerful signal. In fact, the first signal of the day did not get back to the entry point, and in fact it gave us gave more than a 200 pointer move in the put long. 26300 put was the one which we were tracking at the open, and that also gave us an IB3. I'll just come to that chart in a bit and show you how we made use of the NTM and the put chart. So let's now discuss about the NTM and the new feature which has been added, which is this the VxR, the ratio between the call and the put volumes. So how does this help us and what does it show? You can see the Friday's VxR is completely green. That means the call VolumeX was higher than the put VolumeX, and the ratio of that was good. I'll just take you back to the Fridays to have an understanding of what this is telling. So we have discussed how we need to use this. This swipe higher was the first signal, and this came after that initial balance was done, and this was the day where you had the RBI policy. So after the RBI policy was done, you get this swipe in the call. So you know this is where you want to enter calls, and you will book part and trail to cost. We did get a swipe lower again in the C period, and we saw this crossover happening, but again here you got this swipe in the call again, and you can see how they started to diverge. So this is more than the 45-degree which we have spoken, and you continue to probe higher. And what we saw in the VolumeX was this ratio kept moving, going up. You can see in the C it was around 2.6. That means the call volume was call VolumeX volume were 2.6 times the put VolumeX. And if it is increasing, if the distance between both are getting more higher, greater, you know that imbalance is continuing. So what we saw on Friday was it went on to diverge till this 130, and this is where the VolumeX was at the highest, and from there you can see how the distance between the two began to come down from this 130 time, and you can see a down move in the ratio chart also. So this is what it is telling. It is not only telling us when the ratio is increasing. Yes, our setup to get into the trade would be looking at this swipe and divergence in both, and then accordingly look for tradable signals in the order flow of the instrument which you want to trade, and then you can stay in the trade as long as you are seeing the imbalances there. You can see how this put was flat and the call continued to increase. This was still around 330. It is around the 330 time where this put VolumeX started to increase. That is the reason this ratio started to come down. So here you become little circumspect, and then you are not looking for more directional trades after this. So this is what the ratio chart gives us. I'll now come to today's chart, and we'll just revisit this from the open. So what was the open like? You can see how both of them were close to each other, and at 9:30 this was the swipe. 9:27 it is. So these are real time tick data based charts, so this will give you the signal immediately. You may get the confirmation in the Nifty order flow or the put or the call order flow later at the close of 3 minutes. But this VolumeX chart will immediately tell you what is happening when the swipe is starting. So here you can see 9:27 you got this swipe. And this also tells us that you are looking at this 45-degree rule. And it continued to go higher. And you see a fresh swipe here, which is reconfirming that the puts are getting hit. And I'll just bring this chart into and you can see how it continued to swipe higher and how the ratio continued to go higher. It was when it started the swipe, the first swipe, it was 1.45. And as it continued, the second swipe, you can see it came around the 9:35 part. It was 1.76. And here at the start of the B period, it almost touched 2. So what is happening? The call volumes are stagnating, but the puts are increasing. So this is telling you live what the ratio between the call and the put volumes are. And what happened, it kept on increasing. You can see how the ratio kept going higher. This at 10 o'clock it had already touched 3.3. So then what happened? We got the C side. In C side, we become a little circumspect. So we did uh, look at what the C side was able to do. But then again, once the C side was done, you again saw this ratio chart going higher, and you saw this fresh swipes in the VolumeX. This so once the C side is over and you're looking for direction in the DTPO onwards, and you're getting this swipe, you know that you are uh, getting more down move in the Nifty futures. So this continued to happen. It was generally what happens once the ratio touches 4, you need to become little circumspect and become careful with the positions and watch for confirmation. Look to book most part of it and trail to cost, because when the ratio is at 4, it looks a bit stretched, but it is not always the case as we saw today, because when you have the gamma play in force, the ratio can just keep shooting. And I'll come to what happened today and how the put writers were the one who kept getting caught, and why this ratio chart kept on increasing all through the day when we felt that the up move may be over, because we have already hit a ratio of, I think, 5. We saw this fresh swipe in the ITPO right at 115, this part. So this is where we knew that this is now hitting fresh put writers. And we'll come to the gamma exposure chart, and we will see how we can identify which put writers got hit and what was the scene at close on Friday, and how that gamma exposure showed us change, and it was very much in sync with what we saw in this VolumeX chart. So here you can see how we kept on going higher, and at one point of time we hit a ratio of, I think, 11. 11, I think, was the high. Here it is now showing 9.1. So this is extremely high reading. And yeah, this is the highest point, and you can see it had touched 14. This was at 133. So this also marks a very important sign that once this high is made and you have not made new highs, you know now that the market has come to a important zone. And you can see how the low which you made at that time held throughout the end closing time. So this is how the VolumeX ratio helps you. It tells you till the time it is increasing you need to be, but once it is made a new high, and if the price is stopped making new lows, you know now it is time for you to book out of shorts or book out of put longs. So here again we got one swipe into the close, but this was more of closing inventory in the options, and you can see how the ratio kept coming lower, because you can see an increase in the call VolumeX also. So that is how it was today, and that is why this is a very important feature. When the VolumeX ratio is 1, it means both the call and the put are equal. When it is 2, increasing, and it is around 2, it's a strong move. When it rises to 3, the ratio between both call and put, it is a good imbalance which is in play. When it reaches 4x plus, you need to be more cautious with your positions and be very nimble in booking profits or trailing to cost. But as we saw today, from 4 it even went on to make a high of 14, and that happens on very rare days, and it was because of gamma. And I'll take you to the next chart which we have, and we'll see how we could make out that it was a gamma play. Before we go to the gamma exposure, a quick look at the line chart of Nifty futures and the 26,300 put, which I was talking about. So here you can see right at 9:30, we got this IS3 signal, which got activated below the lows of the IS, and how we got this move lower. We formed a MB, and the MB gave a breakout again with another IS signal. So you can see how these IS was telling us that you need to go lower. And this IS3 came well before the 115 break, which we saw. This was over here. Same thing in the put. You can see how we got this IB3 at VWAP right at the time where we got the IS3 in the Nifty futures. And then this micro balance was broken with a green bar. And again, the second micro balance was broken with an IB3. And then we had this fresh IB3 at 115. This was exactly at 115, which was telling you that this is a fresh imbalance which has started. And the VolumeX also supported us. And this went on to make these new highs. So what I was talking about, this was the first signal. It was a buy above this 155, and the stop loss I think was 132, which was the previous day's POC also. So from this 155, we went on to make a high in this put of 380. So this is the power of the tools which we have at our disposal. And when most of the tools combine and give you a signal, you know that you cannot miss those kind of trades. And not all trades will be giving you 200 points, but you need to make sure you are in at the initial part of the trade. You don't want to be a laggard in this market because the market keeps moving and whipping both sides. So you want to get into a setup as early as you can. So this was that early setup. This was another early setup, and this was the last good setup for the day which you could have entered. And from all these three setups, the IB3 signals, you got good up moves. So this is about the line chart of the futures and the order flow. IS3 is IS signal on 3 minutes. Just like we track IS30 on 30 minutes, IS3 is on 3 minutes. Because our execution in the VLD is always on 3-minute charts. So that is the reason we look at the 3-minute time frame. And 30 minutes is for our bias and 3 minutes is for our execution. So coming to that gamma exposure chart, and what I have on screen is the gamma exposure chart at the open today, that which is a Friday close. And let us just do a quick run through the gamma exposure of what happened today. And you can see how the gamma exposure showed 3 peaks, and all these 3 peaks were short gamma: 26,200, 26,100, 26,000. So it was looking that, and we had closed around the 26,200 spot level. So it looked as if the put writers were safe. But then what happened? You see at 9:30 itself, your 26,200 put, the short gamma 26,200 put has turned into long gamma. So this is where the 26,200 put writers were getting hit. When short gamma is changing to long gamma, that means one of the party is forced to cover. And because we were below 26,200 spot and we were moving lower, we did not tag the POC, previous POC. It was very clear that the put writers were running for cover. And as you move forward today, you see this long gamma kept on increasing in 26,200, and here the short and long gamma came very close to each other. The long gamma is almost ready to get above the short gamma 26,100. So that was the next move. Here you see the 26,100 changing from short gamma to long gamma. So this is again telling us that 26,100 put writers are now being taken to the cleaners. And that is the reason we had that VolumeX till the ratio run up till 14, because it first hit the 26,200 put writers, then hit the 26,100 put writers, and finally in the ITPO, you can see how in the ITPO, it even forced the 26,200, 26,000, which here still is the long gamma. This is right at 115. You can see how it is so comfortably higher. The short gamma at 26,000 is higher and the long gamma is much lower. But see what happens just half an hour later. So what you are seeing here is the long gamma has taken over the short gamma at 26,000 and it kept on going lower into the close. So you can see how now the close of today, what does it say? We have a 3-peak structure. We have a 3-peak structure, and in the 3 peaks, we have long gamma 26,100, long gamma 26,000, and short gamma 25,900. So market is not looking to be pinned. We will go to the density chart in a bit and see what the levels for tomorrow's settlement could be. But in gamma exposure, it is completely reversal of what we saw on Friday at close. That is why it is important to know what the exposure chart is showing us, because you know how the inventory is changing hands. So for tomorrow, 26,200, 26,100, 26,000 is short long gamma, and 25,900 is where the support in spot could be. So let's now move on to the gamma density chart and compare it with the exposure. So what do we have in gamma density? The gamma density curve is at 26,000, but the convexity is showing us 25,950. So I was talking about how the 25,960 is an important reference. It was the POC from last month. So that is the reason we will have to see how this inventory shapes up tomorrow. And if these peaks get aligned and show us one single peak, and at the same time we want even these 3 peaks to consolidate and show us one short gamma peak in case the pin effect is coming into play tomorrow. And what would be the spot levels for tomorrow? We have closed at 25,960, I think. Yeah, 25,960 is the close. So the 1 sigma lower is at 25,900, which will be the support, and it goes with that short gamma of 25,900. So in case we stay below 25,900 tomorrow, then you can see 25,900 put guys getting into trouble, just like the 26,200, 26,100 and 26,000 put guys got into trouble today. Whereas on the upside, 26050, which is coinciding with our rollover point, would be the reference. We have an important reference left in spot at that level. So that will be the upside reference. So 25,900 to 26050 is the normal range for tomorrow. Whereas if we get a 3 sigma move, the lower tail is at 25,700, whereas the upper tail is at 26,350. So that is if we get a good strong open and we move in one direction for most part of the day, then you can look at these references if we break and sustain below 25,900 on the downside, and on the upside if we stay above this 26050, then we are looking for a 26350 on the upside. So these are the extreme levels which have a 96% chance of coming, but this is having a better percentage chance. It has a normal chance of it being in this range. It is a very low probability that we will hit this or this fit on tomorrow's settlement. That will be a 3 sigma move, and it is more likely that we stay in this range 25,900 to 26050. But if we get a pin effect, we will have to see tomorrow how this gamma exposure and this density and convexity curve develops. So that is it for today from my side, guys. This VxR ratio, the ratio between the put and the call VolumeX is very good. It is very useful, and it will help you to know if the trend is in an imbalance or whether it is stalling. So make use of it, and other rules are the same of how to use the NTM VolumeX, the swipes, the 45-degree and the crossovers. All of them remain the same. This is just one more addition which can help you get better at the understanding. So thank you guys for joining in, and I'll sign off for now. In case you have any queries, please feel free to mail us at support@vtrender.com, or you can message me on X. Uttam Goyal is my ID, and my WhatsApp number is also given here. Thank you guys for joining in, and let's have a great settlement tomorrow.